All right, guys, we got to talk about the euphoric price action in gold over the last few weeks here. Now, I'm somebody who bought gold way back in 2017, before all of this mainstream euphoria. So I've been in this game for a long time. I understand the thesis behind gold. So I'm going to share my thoughts as someone who is watching this bull market or who has watched this bull market unfold. So it's pretty much the very beginning. So first and foremost, we're going to look at the chart here. Now, this is a weekly chart going back a long time here, all the way back to 97 pretty much. But anyways, so you can see here on the weekly chart, we have just gone parabolic, right? It looks like there's nothing stopping the price of gold right now. You've got one weekly green candle after another, and we're pushing up to all-time highs right now. Now, what's interesting here, though, what is very interesting is when you pull up the RSI on the price of gold, we are currently at an all-time high here, pretty much over the last, 30 years, right? The RSI in gold has never been this overbought over the last 30 years. We have recently exceeded the peak of the 2011 sort of euphoric rise in gold, right? That blow off top in 2011. We are more overbought on the RSI currently than we were back then. And of course, if you just look at the chart in itself, it's going parabolic. Now, if you are somebody who isn't invested in gold or someone who has been holding gold for a while, now might be an interesting time to consider selling. And I see a lot of people FOMOing into gold right now because it's the sort of popular momentum trade. And of course, everybody's bringing up these arguments surrounding, inflation, monetary debasement, central banks buying, right? The, coming collapse of the economy, right? Everybody likes to predict the coming collapse of the economy with, of course, the liquidity crisis that's kind of unfolding right now in regional banks. So everyone's pointing to these things like, we're about to have an economic collapse. You got to go buy gold. You got to front run all this. Well, sure. It's like, okay, there might be some merit to those arguments, especially when it comes to monetary debasement. Obviously, M2 money supply is going up. Global liquidity is melting up. That is all true. But the reality is, if you are a bit more of a sort of prudent investor, you will understand that just because you are right on the fundamentals does not mean it's a good trade, right? There's something that's known as trade saturation, right? So trade saturation is when pretty much all of the bullish arguments have made it completely to the mainstream. And once that occurs, once everybody knows about the bullish arguments and are on board with that trade, that is when you see the melt up or say blow off top. And I think that's kind of what we're seeing right now. We're getting real close to it because, even if you're right about the fundamentals, even if you're right about monetary debasement, inflation, perhaps a liquidity crisis of some form or M2 money supply, even if you're right about all those things, it doesn't matter if all of those factors are priced in, right? So, if you look at the last big peak in gold in 2011, you know, you had all the same fears, right? Everybody was worried about all the money that was printing after the financial crisis. They thought there was going to be inflation. And eventually there was, but they got ahead of themselves, right? And the trade had nowhere to go but down because it reached saturation. Retail was buying hand over fist at that point in time, right? All the gold dealers, they were out of stock of bullion because people were rushing to buy it because they thought the whole system was going to implode, okay? And when that happens, when everybody is buying, when everybody's bullish, when there's not really any resistance to the bullish arguments, you have hit trade saturation. When you hit trade saturation, there's really no more room for it to go up, even if everything that supports this thesis comes true. It's all priced in. Okay, so that's very important to think about. And it's really the same thing with the dot-com bubble, right? The dot-com bubble, the investors who participated in the dot-com bubble, they were right about the internet changing the world. They were right that the internet was going to be the future of the economy, but the trade hit saturation where everybody was on board. and they priced in a decade of growth in a matter of 6 months. So there was nowhere for it to go but down, despite the fact that they were correct about the arguments. Now, when I was buying gold, in this sort of area here, kind of 2017, 18, 19, really before it started its move up, this was a very different time to be buying gold. At this point, nobody was talking about gold. There was absolute crickets from the mainstream media. It was not popular. Um, People didn't believe we were going to have inflation. They weren't concerned about monetary debasement. It was unpopular, right? Nobody was talking about it. And at this point in time, around like 12, 1300 gold, the cost of producing an ounce of gold was actually above the actual price of gold, meaning that every single mining stock was losing money, right? It would cost them $1,300 to produce a price or an ounce of gold, only to sell it for like $1,200. They'd lose $100 for every ounce they mined, right? So you had that supply constraint. So they were there wasn't really any expansionary capex exploration. Um, Companies were going out of business, et cetera, et cetera. So supply was reducing as a result of that. However, now all these mining stocks are super popular. They're profitable. They're popular. They're profitable. They're building out mines. They're doing everything they can to increase production because now there's an incentive to do so, right? So supply is increasing, whereas through here supply was decreasing. And also, of course, there was no hype premium because nobody was talking about gold or cared about gold or was worried about inflation or M2 money supply, global liquidity. None of that was a concern at this point in time. And that was the time to buy because at that point in time, there was no hype. It was all just fundamentals. It was all fundamentals. There was no hype premium, and the trade was nowhere near its saturation point. But now, look at the chart. People are buying like crazy. It has hit the mainstream. People are going to Costco and attempting to load up their shopping carts with gold because whatever financial media told them that it's going to the moon. That's not the time to be buying gold. Sure, could it go higher? Sure. Could it go to 5,000? Sure. 10,000? Who knows? But you're certainly not going to get there without a meaningful pullback here, right? The price of gold just doesn't go straight up, right? Any time in history where gold has gone euphoric has ultimately ended in about a decade of stagnant price action. And we've never seen anything quite like this on the chart before. Like, just look at the deviation from the 200-day moving average on the weekly. We are just up in space here. We're literally up in space. Because even if you look at the deviation during the gold's last big bull market from the 200-day moving average, you can look at like for example, if you just were to look at this peak relative to what it was trading above the 200, it was trading about 74% above the 200. Now, if we look at gold right now, what is it trading above the 200? Let's see here. Okay, you got the peak here. All right. It's trading at about 90% above the 200-day moving average, right? It is very overextended. You can see that on the RSI, as I mentioned earlier. The RSI has never been this high on the chart. 2011 Pico top, we're trading above that on the RSI. It's just very overextended. You look at Google Trends, buy gold, for example. We recently hit a peak. The same peak as in 2011, right? So now is just not the time to be buying gold. Now, if you are just a trader, a momentum trader, then maybe there's some upside there. But if you're a retail investor who's like, now's the time to go and buy some gold or silver bullion to put in the safe, that's probably a foolish investment because, for one, because gold's so popular right now, you're paying quite a bit above spot for these for bullion, right? So you're instantly losing money because when you go to sell gold, um, you lose that premium, right? Essentially, what they do is they just give you spot. So you pay above spot to buy your gold, and then when you sell it, you get the spot price. So you lose that premium. So right there, you lose like 10%, depending upon where the price of bullion is trading relative to spot. But you basically lose like 10% instantly. which is, obviously not ideal. And then, of course, you got to deal with it. You got to store it. You got to keep it safe. You got to do all this stuff. Um, so I really don't think now's the time to be rushing to buy bullion. Again, like I said, if you're a momentum trader, short-term trader, then there might be some, um, meat on this bone that you could go after. But, you know, I think the downside risk massively outweighs the upside risk at this point because gold can really go down fast, especially mining stocks. If you're in mining stocks, if this market turns, if this goes bearish, some of these over levered mining stocks can literally go to zero. Whereas gold could go down 50%, and when gold does go down, it stays down for a long time, right? This 2011 peak, if you were buying gold, if you were FOMOing into gold here, it took you 12 years to get your money back, essentially. Took you, yeah, 10, 12 years, depending upon where you look at the chart here, but 10 years. So you're underwater for 10 years. And then you're stuck with an asset that doesn't produce any income, dividends, etc. So, gold is a really tricky one. There are so many of these sort of illusionary macro arguments for gold, right? Everybody likes to predict the next recession. Everyone's worried about a collapse. And it's gold is something that's pretty easy to sell because you'd be like, look at the national debt, look at global liquidity. What happens if we get some sort of yeah, economic, meltdown like 2008? You're going to want to hold gold. So there's so many of these kind of macro abstract arguments to push the price of gold because, it's not like a stock, right? It's not like Apple stock where you can value it based off of, free cash flow, earnings growth, etc. It's a little bit more tangible. With gold, it's a lot of things that you can't really see or quantify. So it's easy to sell, and a lot of people buy into that. So for me, as I said earlier, I bought back in 2017 when gold was actually cheap, when it was unhyped, when miners were still in the dumps. And I have recently unloaded my entire position, and now I'm looking to invest that money into somewhere else. So, and I'm kind of, laughing at people who are rushing to buy now because it's like, where were you? Where were you 8 years ago, right? Nobody wanted to buy gold back then, but now you're going to go and FOMO in when it's breaking all-time highs and is massively overextended on the RSI. Like, you're not going to do well investing with that strategy. All right, guys, thank you for watching. Those are my thoughts on gold.